Good morning, traders, and welcome to BCR's morning market outlook. Let's take a look at how the major markets are setting up today. First up, let's have a look at the US dollar index. The dollar traded in a wide range last week between 96.38 and 97.42. Stronger than expected June non-farm payrolls helped ease some concerns about the labor market. The US economy also added 147,000 jobs, which was well above the forecast of 110,000. This has led traders to scale back expectations of a Fed rate cut this month. However, trade policy uncertainty continues to weigh on sentiment. President Trump's plans to start sending letters on tariffs, possibly setting unilateral rates ahead of the July 9th negotiation date, have added a fresh layer of uncertainty. The House passed Trump's large tax cut and spending bill, which could increase the budget deficit by over $3 trillion, raising long-term fiscal concerns. Technically, the dollar index recently broke out of a descending wedge pattern, but remains stuck between 96.38 and 97.42 as markets digest these developments. Without a strong catalyst, momentum looks weak and the risks still seem tilted to the downside unless buyers can push it back above the 97.73 level. Next up, let's have a look at WTI crude oil, which saw a pattern of falling first and then rebounding last week, with prices hitting as high as $66.75. The strong US data has complicated the outlook. While it supports the Fed holding rate steady, it also points to weaker oil demand as higher borrowing costs weigh on US economic activity. Looking ahead, markets are focused on OPEC's expected decision to raise output by 411,000 barrels per day starting in August. That would bring the total increase to about 1.78 million barrels per day by 2025. Sanctions announced by the US last week on networks smuggling Iranian oil are helping to limit the downside for prices. In the short term, oil continues to balance between concerns about weak demand and ongoing geopolitical risks. Next up, let's have a look at gold. Gold prices found some support from bargain hunters at the end of last week, holding around 33.40 after retreating from a recent high of 33.65. The stronger jobs data reduced expectations for a Fed rate cut in July and lifted both the dollar and treasury yields, both factors that have capped gold's gains. That said, uncertainty around trade policy and fiscal concerns linked to Trump's tax and spending plans are keeping safe haven demand intact, which helps gold avoid a deeper pullback from now. On the technical side, gold is consolidating just below key resistance at the 20-day moving average at near 3350, with 3365 and $3,400 seen as the next important levels to watch. Lastly, let's have a look at the Australian dollar, which remains firm, holding around 6570 after hitting its highest level since November last year at 6690. This strength comes despite growing expectations that the RBA will deliver another rate cut at its meeting on July 8th. As inflation stays weak and growth slows. Technically, the Australian dollar continues to show a bullish bias with an ascending channel supported by strong momentum above its 20-day moving average. Key resistance levels to watch include 6590 and the round number 66 cents, while support lies at 6520. Well, that's all for today's morning market analysis. Let's see how markets develop as we move closer to key data and policy decisions. Trade safe, and I'll be back with more updates.